SIN is an add-on requirement in India. We basically deal with many type of taxes in SIN. So generally these type of taxes are considered under the India localization. One is sandbird, which is also called excise. Then comes your VAT, well, taxation.
May I know about yourself, please? Like what background and how it will?
Yeah. Actually, I'm in SAP since around 12 years, and I have worked on multiple areas like MM, WM, SIN, PP, PS, and all that. Okay. I have implemented around 5 to 6 implementation and a couple of support projects.
Okay.
So where you located, Manav?
I'm in Bangalore.
Okay. Fine.
Yeah. You are from?
I'm in Ahmedabad.
Ahmedabad. Okay. Yeah.
So I will start with the very basic thing. See, SIN is a thing which we cannot explain. I hope you'll have a basic idea about the SIN. Because SIN is more about the conflict part, and if we talk about the SIN, so SIN is not only linked with one module. It is not only linked with MM only. SIN has an integration with MM. It has a close integration with FI. It has a close integration with your SD. Okay. So like if we talk about the generic way, the excise part, it will be applicable to, let's say, your incoming goods. Okay, generally we pay excise duty on incoming, but in many cases it is all exempted if your unit is dimmed unit or it is 100% export unit. Similar way, the VAT is applicable everywhere, service tax and sandwich credit. So I just brief you here. What is sandwich? This sandwich excise is as per the law. Whenever you are producing anything, if you are manufacturing anything and if you are selling in market, then you will be liable to pay tax. Either that tax will be in terms of excise, okay, and if you are dealing with material, it will be considered as a tax as excise, and if you are dealing in services, it will be considered as tax. Okay. Now, this is your basic taxation part. Apart from that, there are some additional taxation, which generally is your VAT, value-added taxation.
Yeah.
Okay, the VAT portion varies from state to state because VAT is purely controllable by states. Okay, like in Maharashtra, you'll find 4+1 means the 4% VAT and 1% additional VAT. And in Gujarat, you'll find 4% normal VAT and 2% is additional VAT. Okay, see, this all VAT excise controlled by using the tax code. Like as you said that you are in MM, so I guess you're aware about the taxation, the tax code part and all that.
Yeah, okay. Tax code, sir. Yeah.
Okay, so one way is that if you create a tax code, so we will include our excise. Okay. Then after it, we add your VAT. Now, when we talk about excise, so this is a tax code is a part. Why we assign a tax code? We assign a tax code in purchase order to know your actual landed cost, okay, or to know your liability for payment. Fine. So it will have a taxation, your basic rate, your discount, your freight, I mean every condition. Like if we talk about the freight part specifically, so on transporter, excise is not payable, but service tax is payable. Okay. Basically, the SIN part deal with all kind of taxation, which is we can say in a simpler word, which is add on to your basic price. Now, as per the material classification characteristic, government provides the various tariff headings, okay, which we call it chapter ID. Like if we talk about a particular type of material, say fuels, okay, so fuel like coke, coal, they'll have one chapter ID, and that chapter ID will be given by Government of India. Okay, so first of all, if you want to do some kind of excise, if you want to produce anything, and if your goods comes under the excisable category, so first of all, we'll have to apply for excise registration. Okay, then that registration will be a part of your SAP conflict. Okay. See, what are the base? What is the basis of duty? Okay, what are the basis of charges which government applies? See, uh, it is statutory requirement tax rate provided by Government of India and are subjected to change after each year or maybe in between. Like you must have heard that Government of India has included the Swachh Bharat cess, and recently from 1st June they included the Krishi Kalyan cess. Okay,
Yeah,
so
yeah.
these are cess. There are different cess. So you'll have a basic excise duty. Uh, if we talk about the standard scenario, so we'll have a basic excise duty, we'll have a higher education cess and HSS, SSS. Now, apart from that, there are different type of cess which is applicable, and this is reviewed by Government of India time by time. Okay. Now, this is about the if we talk about the domestic procurement, like if we talk about some kind of export or import category, suppose if we are importing anything, okay, in that case, you're not liable to pay excise duty, but your excise will be converted to other type of duty. That duty is called CVD, countervailing duty. Okay, in a simple word, you can say that uh, the government of India has changed the name of excise to CVD,
Mm-hmm.
and the percentage, definitely your percentage will be lesser or higher. Your excise and CVD won't be on the same platform. Okay, and
Yeah.
like here I written that there are some unit which is considered as a dimmed unit. Suppose if you are producing something and your total production is going for, so you are sending your total production for export. Okay, so these kind of units, government consider these kind of units as a dimmed unit. Okay, and dimmed units are not liable to pay excise duties. Reason, because when you are exporting something, you are generating revenue for government of India in terms of a foreign currency.
Mm-hmm.
Okay, when you sell to foreign country, we are bringing dollars, US dollar, euro, whatever currency. Okay, so it is a add-on to government of India. So these kind of units, which is 100% export oriented, are exempted.
Mm-hmm.
Okay. Type of excise duty. As I said that there will be standard. This is a standard one. First is your basic excise duty, which comes around, which vary around 14 to 15%. Okay, then comes your additional excise duty. Now, additional excise duty is applicable to certain product because excise is not a standard one. Let's say if you are purchasing a coal from market, then your duty is 20%. While if you are purchasing steel, your duty will be 15%. In this, okay, and this is a declaration. That's why government provides a different chapter ID, which is a classification of a product. Okay, so they simply raise one notification whenever they change their excise rates. They simply publish one notification, okay, and we'll have to set up as per their notification. So here we'll have a BD, AD, SED, special excise duty, and here your cess, education cess on secondary and higher education cess. Nowadays, a third cess, which is a temporary one, Swachh Bharat cess and Krishi Kalyan cess, is also a part of
Yeah.
duty.
Okay. What's the major difference between that additional and special excise duties? Major
Additional
difference.
and
Like,
special excise duty. See, AED here, AED, additional excise duty, is commonly used on import.
okay.
Okay. And why it is, see, what happened, special excise duty, what happened, nowadays government has started a practice of declaring an area as a SEZ, special economic zone.
Mm-hmm.
Okay. So in a special economic zone, they say that there will be a tax-free production.
Mm-hmm.
Okay. So if you are in the SEZ, you are not bound to pay excise duty, but they'll take a one marginal percent of excise from you by using this special excise duty. The special excise duty and additional excise duty, as I said, that is mainly on the product.
Mm-hmm.
Like if you are importing any steel from, suppose you imported any steel from China, okay,
Mm-hmm.
so there will be additional excise duty because in order to protect the interest of Indian manufacturer, government put these kind of duties. Like I don't know whether you heard, there is a one duty which is called anti-dumping duty. Suppose in India some product is available at the cost of 100 rupees per metric ton. Now China can supply us same product at 80 rupees per metric. So definitely people will love to purchase Chinese product. Okay. So now what government do? In order to protect Indian manufacturers' interest, they add a additional duty on that in terms of an anti-dumping duty. Let's say they'll say 20% is an anti-dumping duty. So the basic cost is 80 rupees. So 20% of 80 rupees will be a final cost for your imports. In this way, I mean, it is again this additional and special excise duty. This all are on based of your product category and they revise. You cannot say that special excise duties. Suppose if special excise duty is applicable on today on fuels, okay, it is not fixed. It may possible that government will replace this special excise duty by additional excise duty. Oh, I see.
Okay.
Now, as I said, that there will be specific duty. It is calculated on the basis of central unit. If you remember the consignment process and vendor consignment process, we do not keep any price in purchase order, right? The price will be derived from info record whenever you take a receipt, whenever you issue material in vendor consignment. Okay. It means that for your excise duty calculation, you need a basic price. I don't know, I mean, if you've seen the excise part of vendor consignment, so generally what happens whenever you take a receipt, okay, at the time of receipt, you can capture your excise duty. Okay. But in case of vendor consignment, you cannot capture your excise duty at the time of receipt because your PO is very value. Okay. So these kind of duties where you cannot capture duty with respect to purchase order, it comes under a different category. Here we with reference to material document. Other then on excise payment overview, what happened actually? Suppose this is your manufacturing unit. Okay, you are purchasing something.
The
So
screen is not moving actually. You are in 7th slide?
Yeah, I'm on 7th.
But it's still in 6th. I don't know.
Wait, it will change.
Yeah, now I think, yeah. Can you come to 6th one more time? Can you come to 6th? Yeah, what is that add Valaram duty?
See, there are two kind of excise calculation. Okay, one is purely based on the per unit price. Okay, like your per unit 10 rupees, so 14.5% excise duty is payable. Okay, so one way. Second way is that there is a duty which will be based on value of goods, total purchasing value of goods. Okay, so this duty, second one, is applicable on value based total. We can say the total consignment value. Well, while other one is purely based on price. Okay, like then duty based on tariff value. As I said that they'll define one tariff code, which is your chapter ID, and they'll assign a duty for that particular tariff code, and commonly it is in terms of the ratio. I mean the percentage of your basic.
What is that assessable value and this one?
See what happens whenever we generally what happens whenever we maintain our J1 ID setting for excise. Okay, have an assessable value. Okay, we can say the excisable value. Okay, this assessable value is mainly used for your outgoing product.
Okay.
It is not useful for your goods, because for incoming goods you know the excise percentage. Now here if we talk about the incoming goods, so there are two types. We can classify incoming goods in two categories. First is if manufacturer is you are purchasing a product from manufacturer, then he'll give the duty straight away. But if you are purchasing from trader, so trader cannot generate excise duty. What trader will do, they generally procure material from any manufacturer, and after that they supply you. Their trader is simply one mediator. Okay. So in case of a trader won't generate an excise duty, he will simply pass on duty to you.
Okay.
So here, in case of incoming goods, you don't have any control over the duty, because see, simply you have to receive whatever is coming to you. Okay. But in accessible value is used for your outgoing or what you're selling in market. Okay. For that we define one excisable value, and system use this excisable value for calculating your excise duty on outgoing products.
Okay.
Now I'm on slide number 7. Now what happened? How this excise exactly works? Suppose so here are only this is the straight line chart. See, you are here at plant. Okay, what you'll do? You'll purchase something, so you'll collect any duty from your vendor. Okay, then you'll sell something, so you'll pay some duty. Or if you are a customer, so definitely you'll be a vendor for any other party.
Correct.
Okay, so here you have collected a duty and you signed a duty outward. So the difference between your duty collected and duty outward is your liability to government. Okay. Now here different type of duty. They categorize duty. Suppose if you have taken suppose steel. Okay. So they allow you to take a risk, this duty, excise duty of steel, to utilize during your duty calculation. Suppose you have collected 10 rupees duty from vendor, right? And here, when you sold it, you collected, you signed a duty of 20 rupees. So there is a straight difference of 10 rupees. Okay, this is a very simple scenario. Now what happened here? If I am saying that difference is 10 rupees, it means your product which you have purchased from outside market, on that product is sandbaitable, means you can consider his duty part for during your duty calculation, right? Now there are certain products for them you cannot utilize the duty in duty calculation. So in that case, what will happen? If you have purchased something from market and you received excise as a 10 and you sold at the price of total excise payable is 20, so your difference will still remain 20, because the product which you have purchased from market is not sandbaitable. You cannot consider sandbait for that particular product.
No, I didn't get it. Here, 10 rupees you are utilizing or not?
See, the utilization is purely based on the type of item.
Okay.
Okay. So purchasing item from market, so the government gives a notification that you can utilize that duty for sandbait payments. For a second item, it may possible that they say that you cannot utilize. So if the second category which you cannot utilize will be considered as your expenses.
Okay.
Okay.
So it will not deduct during the time of vendor payment time, whatever the excise you paid.
No. That's why I said.
That will not.
If you are not able to utilize that duty, but definitely you will have to pay to vendor. So that duty will be considered as your expense.
Okay. No. During that payment to the customer, to selling to the customer, that time that amount will be get exempted or not? Whatever you paid to the vendor, the same duty get exempted during the time of customer.
No. Again, it depend on. Again, it depend on the situation. Like if you are deemed, so there is no need to pay any duty. Okay. If you are not deemed, if you are selling in domestic market, so you'll have to pay the duty.
Okay. Okay.
Because what happen in any industry, example which I told you, has only one item, but in an industry there will be 1,000 items coming in. Okay. And your outgoing product will remain only one or two. You'll have a very few items as your finished product. While you'll have a multiple item in terms of your raw material, in terms of your spare goods, in terms of services.
Mm-hmm.
Generally, this utilize, see, on end of the each month we do the utilization. Okay,
Mm.
in utilization, we see. I'll tell you the register part later on. In this. Okay, so here is about the payment. Duties to be paid by 5th of the following month. Duty deposit in
Okay.
bank by using TR6 challan and credited to by PLA. I mean, these all are statutory requirements. Duties paid by debiting PLA.
Mm-hmm.
Now here are some excise registers. Okay,
Mm-hmm.
so first of all, you'll have a RG23A. Okay, RG23A and C. There are two registers which is used for your incoming goods. Okay, RG23A is used for your revenue
Okay.
items, while you use C for your capital item, because as per the government law, you cannot utilize 100% duty in a 1 year if you are purchasing the revenue item. So what happened? You can only utilize 50% of duty in current year. Remaining 50% will be utilized during next financial year.
Okay.
Okay.
That time
So
the GLs will be separate. The GLs will be separate,
yeah,
or
yeah.
how it is?
See, GL will be separated, and at the time of your excise posting, one GL will be excise 50%, second GL will be excise on hold.
Okay. Mm-hmm.
Okay.
Okay.
Then comes your RG1 register. RG1 register is used for your outgoing in sale.
Okay.
Like whatever you are selling will be registered under the RG1 register. Okay.
Mm-hmm.
Then your PLA, performa ledger. Then comes your RG23D. See, RG23D is used for your depot transfer. Suppose if you have one plant and you have a multiple depots across the India. So what happens whenever you are moving goods out of your plant, so you'll have to pay your excise. Either you are selling or transferring. So what happens? Suppose if you have one plant here and you want to transfer material from your plant to depot, in that case, along with material cost, you'll have to transfer your excise to depot also.
Mm.
Okay, because when you sell material from your depot, then you'll charge excise. So definitely you'll have some excise
Mm.
incoming also.
No, at the time of depot transfer, you have to pay excise.
Yeah, yeah, you'll have to pay excise. See,
Okay.
in a simple word, any material which is going out of your plant,
Uh,
if material is excisable, then either you'll have to pay excise, either you'll give excise to your customer. One way,
mm,
see, there are what are the mode of for selling a product? The first mode is you are selling directly to your customer, right?
mhm,
Second, you are not selling directly to your customer. You are sending material to a trader. Okay,
mhm.
and on behalf of you, trader is selling. Third one is you are not directly selling to customer. You are storing your material at depot somewhere. Okay,
Mm.
and after that you will sell material from your depot.
Mm.
Okay, so when you sell material from your depot, at that time you'll charge excise in customer invoice. Okay, so
Mhm.
definitely you must have a excise part in your depot also.
No, this excise also get included from manufacturing plant to depot you are transferring, right? That time also that
Correct.
excise will be get
No,
add
no.
on
In
in
case of
customer invoice.
in
Mm.
case of a depot transfer, we can say this is only a transfer of excise duty from your
Okay.
plant to depot.
Okay.
Okay.
That
See
that
what
will not be
happened.
included. That will not be included to the customer when you are selling.
No, no, that will be included.
Oh, even the transfer also.
I'll tell
Plant
you
to the depot transfer.
in another way. Wait. Suppose here is your depot. Okay.
Where you are explaining? You change the screen
Come on.
or you change the
Yeah, change
screen?
this. Yeah, change this.
I think it's running a little slow.
That's
Yeah, yeah.
okay. So this rectangular box is your plant, right?
Mm-hmm.
The
Mm.
circled is your depot. and triangle is your customer. Okay.
Okay.
Now, one way is that you will directly send metal from rectangle to triangle. Okay. In that case, you will directly charge excise on your invoice. Second way is that you will transfer material to your depot for temporary storage purpose. Okay. So in that case, along with your material, your excise will also need to transfer to depot. Suppose your excise is 10 rupees. Okay. So you transfer this 10 rupees duty here. Okay. So now when you want to sell your product, this same 10 rupees duty will be passed on to
Customer.
customer. Okay. So this is one additional step because you are transferring material by either you will be using some STO or you will be using some through SD route or MM route. Whatever route you use in SAP, excise will be transferred. So for these kind of transfer activities, there is one specific register. That register is called RG23D.
Okay.
Okay.
But here again, from circle to triangle, again some excise duty will be there, right?
Which one? Circle to? Yeah, there will be.
See, let us take A is equal to 10. The B is equal to some other 5 or something also will get
No,
included
no,
in
no, no,
that.
no, 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 no. Same duty.
Same duty only. Okay.
Same duty only because you are transferring duty, na. See, excise is applicable on generation or manufacturing or production of the product. In depot, you are not doing any kind of manufacturing activity.
Correct.
You are simply storing your material.
Correct. Okay.
Okay, then comes your excise monthly returns, which generally fill up. This is statutory requirement. Then come your bond. These are different types of register, license registers, running bond register. It is. I mean, nowadays the bond register are void by the government of India. They are not saying to. They are not forcing anybody to maintain the bond register because everything is more or less online now.
Okay.
Then comes your VAT or CST. Okay. This, how is sales tax? This is about the sales tax. Okay. So what happens when you sell anything? Suppose if vendor is selling any product to you, that they have to pay VAT. Okay. So where VAT is applicable, where CST is applicable. See, if I am purchasing any product within my state, then VAT is applicable. But suppose I am in Gujarat, if I am purchasing metal within Gujarat, then VAT is applicable. While if I purchase outside Gujarat, let's say Maharashtra, Karnataka, any other place, then VAT will be replaced by CST.
Okay.
Okay. Basically, CST is used for interstate sales when your state is going to change. Okay. And VAT or CST, you can use only one component. You cannot use both components. Okay. So VAT is again VAT is again follow a same principle of excise, but it is much simpler as compared to excise. Because in excise will have a multiple bifurcation like B, D,
Yeah.
okay, then okay,
Okay.
VAT, simple VAT, and second additional VAT.
Yeah.
VAT is collected by your state governments. Okay, this is the difference between sand VAT and VAT. Okay, first of all, sand VAT is a value-added tax which is collected by central, means government of India, while VAT is collected by state government.
Okay.
In the same way, revenue to central government, sand VAT is revenue to state government. Sand VAT is applicable on manufacturing of goods, while VAT is applicable on sale of goods.
Okay. Okay.
Then sand VAT is very much simpler that because you'll have only single point tax collection. Okay, like here a return paid at the first point of goods movement. But in case of VAT is much complex because there will be a different type of VAT. Suppose you purchase material from different areas, so there are some different stations to file its return. Okay, here in case of a SANVAT, credit can be availed. The credit is about the utilization. Okay, here in case of VAT, you can utilize or you can avail the VAT except in case of LST. Okay, then here this is the older one generates SANVAT rate at 16% with exception. Here see, excise is much. It is more about the exception part. Suppose they define 100 rules. Okay, out of that 100 rules, 95 will be made for giving exceptions. Like if you are producing any ceramic product, you will be exempted from excise. Like if you are producing any rubber product, then there will be additional duty. Okay, this is only this is the government, the body control all this. So we applicate same in our system. Okay, now SANVAT credit can be availed last one on services. Okay, but VAT is not applicable on services. We cannot avail for services.
Can be बोले तो it's a both. SANVAT credit can be availed on services. Availed on goods also it can be.
It is applicable to goods as well as it is applicable to services also.
Services also, okay. But wherever you come here, SANVAT credit cannot be availed on services in VAT. Means VAT won't be there. Services time VAT won't be there.
Yeah.
Hello?
Yes.
VAT won't be there at the time of services.
Yeah, VAT won't be. Now, the next one is simply a logistic process flow, which you will be aware. This is your plant tax. So, this is your sources. We'll say that this is the source of excise. So, you will collect excise from your domestic vendor, or CBD will be collected if you are doing any kind of imports. Okay. Now, you'll send material to your outside vendor.
During the import, how many taxes will be there? CVD, even BED would be there?
No, there won't be any BED. There will be a BED. Basic duty will remain same, but your cess will be removed. Second, you'll have a CBD, countervailing duty, and there will be almost in all cases there will be one special excise duty, which is called SCD.
Okay.
Okay, because see, as I said that it varies from product to product. If you are importing any fuel, coal, coke, or steel, so there will be a SCD.
Okay.
Now,
normally, if SCD is not there, AED will be there. Most of the time, AED will be there. If AED is not there, sometimes SCD will take a place based on the product.
Yeah. In many cases, it is both are applicable. Like if you want to purchase some steel, okay, some let's say specific example, if you want to purchase some stainless steel, okay, will be applicable. So plant tax, now material depot, and after that it will be transferred to your domestic customer. Okay. So the way I told you about the transfer mechanism of depot, the same. Yes, it lost my connection.
Hello, can you come again?
Hello?
It's got cut. Your voice got cut. Can you come again?
Actually, I lost my connection. Actually, I lost.
Hello.
Is it audible now?
Yeah, now audible. Some
Hello, is it
disturbance.
audible now?
Yeah, now audible. Audible. Yeah.
Actually, I lost my connection.